It's a great day in the office with our markets hitting all-time highs. Benchmark indices, Nifty and Sensex hit record highs, making investors wealthier by 7 lakh crore. Now what's driving this? It's a mix of everything coming together. Global cues are looking good, FPIs are continuing to pump money in, the ECB just announced a rate cut and the inflation data. It's looking positive. All these factors are giving the market a perfect push. And just a day after the US inflation, which was recorded at a low of 2.7% for the month of August, India's inflation numbers are out. India's consumer price index, or rather inflation, rose marginally to 3.65% in August, up from 3.6% in July. Inflation has now remained below the 4% mark for a second month. However, the CFPI, which is a consumer food price index, or rather food inflation, which accounts for around half of the overall CPI basket, rose to 5.66% for the month of August, slightly up from 5.42%. A point to highlight is that this figure remains within the RBI's target of 4%, with the tolerance band of plus 2 minus 2 percentage points, meaning that the target is within the range of 2 to 6%. This target is meant to balance economic growth while keeping inflation in check to protect our purchasing power. Now, when we look at the breakup, food and beverages combined rose 5.3% in August from 5.1% in the previous month. Within this food basket, inflation in pulses, vegetables and cereals continues to remain high. Moving on, clothing, footwear and housing remained at the same levels as the previous month. Fuel and light segment continued to remain in the deflation zone and recorded negative 5.3%, continuing the trend observed over the past 1 year. Now looking ahead, the RBI MPC meeting is scheduled to meet on October 7th to October 9th and decide on the interest rates. But at a recent forum, RBI Governor Shaktikanta Das signaled no immediate plans to cut interest rates despite recent easing in inflation falling below the RBI's target. In context, the RBI has kept interest rates unchanged for over 18 months at 6.5% and is also expected to keep rates unchanged for the upcoming meeting in October. However, the US is playing another ballgame. With inflation falling to 2.5%, closer to their 2% target, Fed is expected to cut interest rates in the upcoming meeting and twice more in 2024. On the other hand, the European Central Bank cut interest rates again yesterday to 3.5% as concerns arose about slowing growth and the risk of recession. In context, lower interest rates can stimulate economic activity by making borrowing cheaper for businesses and consumers. While the ECB already cutting interest rates and the US Federal Reserve to follow suit on September 18th, it will be interesting to see how our RBI MPC meeting will convene its meeting. Before we conclude, while other economies like the US is expected to grow at 2.6% for 2024, China at 5% and India at around 7%, making us the fastest growing major economy, India stands at a much more relatively comfortable position compared to its peers. Now having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.